PTPTPW News.
Finance News today for a better tomorrow and a brighter world. Singapore Exchange Limited, or the SGX, is an investment holding company located in Singapore, which is Asia Pacific's first demutualized and integrated securities and derivatives exchanges. SGX is a member of the World Federation of Exchanges and the Asian and Oceanian Stock Exchanges Federation.
Stock exchange is a form of exchange which provides services for stockbrokers and traders to trade stocks, bonds, and other securities. Stock exchanges also provide facilities for issue and redemption of securities and other financial instruments.
SGX was inaugurated on December 1, 1999. Following the merger of two established and well-respected financial institutions, the Stock Exchange of Singapore and the Singapore International Monetary Exchange. The share capital of some former exchange companies, namely Stock Exchange of Singapore, Singapore International Monetary Exchange, and Securities Clearing and Computer Services, was cancelled and new shares issued in these companies were fully paid off by SGX. In this way, all assets previously owned by these three companies were transferred to SGX. The shareholders previously holding shares in SES, Cymex, and SCCS received newly issued SGX shares. On the 23rd day of November year 2000, SGX became the first exchange in Asia Pacific to be listed via a public offer and a private placement. Listed on our own bourse, the SGX stock is a component of benchmark indices such as the MSCI Singapore Free Index and the Straits Times Index.
Meanwhile, SGX offered to buy ASX valued at $8.4 billion, a 42% premium to ASX share price. Singapore Exchange CEO Magnus Booker offered to give more board seats to Australians in a concession aimed at overcoming opposition from lawmakers in Canberra. Monica Reyes reports.
The ASX and the Singapore Exchange announced the bold merger plan that both sides hope will cement the status as financial centers of the Asia Pacific. The SGX offer values the Australian Securities Exchange at $8.4 billion and would create a market that would value $2 trillion, a market big enough to challenge even Tokyo or Hong Kong.
And we believe the new group we endeavour to create will be a very competitive global exchange force to be reckoned with.
It's a friendly deal that would create the world's fifth largest stock exchange operator. The Singapore Exchange has offered $8.4 billion to buy the Australian Stock Exchange. Local investors welcomed the offer with ASX shares closing 19% higher. The proposal could give local investors better access to high-growth Asian markets. But the ASX and the SGX would remain locally listed and regulated indices. But there are concerns about the ASX ownership going offshore, especially with its prospective buyer being almost a quarter owned by the Singaporean government. The proposal still needs approval from the shareholders and regulators in both countries, but informal discussion with the authorities appear encouraging. Analysts say any merger would help the Australian Stock Exchange to defend itself from the new competitive threats.
Oh, excuse me, Paul. Well, certainly, this is one of the most significant and one of the most dramatic events in the history of financial services in Australia. Court approval is also going to be required. And approval of the Foreign Investment Review Board, which makes a recommendation to the Treasurer. Approval of the Australian Securities and Investments Commission. Approval of the ASX equivalent in Singapore, the Monetary Authority of Singapore, and very importantly, of course, the Merger Implementation Agreement makes references to either a regulatory amendment or an amendment to the corporations that's going through Parliament.
It's not the right deal for Australia if we want to ensure the strength and stability of our financial system.
Any future bid would need to build Australia as a financial services hub, increase its integration into global capital markets, boost its access to capital for local companies, and support financial sector jobs. Approval of the deal would have left ASX as a junior partner in the merger.
The federal government is expected to begin allowing foreign exchanges to operate in Australia. It's all part of Canberra's plan to make Sydney a financial hub for the Asia-Pacific region. This is Monica Luis Reyes reporting live at Singapore.
Earlier this week, the Australian Treasurer sought to reassure investors the rejection of Singapore exchange bid wouldn't signal increased scrutiny or obstacles for overseas deals. Aibe Bornea reports.
The SGX proposal of a merger with the ASX to create the world's fifth largest stock exchange operator, which was viewed by the Australian authorities as a form of takeover, creates significant effects on both markets after the rejection of the Australian government of the said tie-up.
The proposed takeover would risk seeing jobs and capital move to Singapore, and I'm not going to stand by and let that happen.
The takeover would not enhance the access of Australia to global financial markets. Swan said that the claims made by the applicants didn't stack up and that he had no hesitations rejecting the same. ASX shares climbed as much as 0.6% to 33.68 in Sydney trading today, while Singapore Exchange jumped as much as 2.1% to $8.32. Pressure on rival exchanges to consolidate is increasing as the fight to attract global capital intensifies. Swan said the Singapore government's interest in the country's worst operator was not a factor in his decision. He said he asked the Council of Financial Regulators to look at a regulatory overhaul to protect issuers and investors for a future bid by another exchange.
This has been a bungled process. Wayne Swan has turned Australia's international reputation into that of a third world country.
This is Aibe Bornea reporting live.
And those are our happy stories for today. I'm Alyssa Inoc.
My name is Lyndell Nabua, and this is the FNTVTVW News. Finance News today for a better tomorrow and a brighter world.